All right, good afternoon. Thank you again for joining us for BRAC's business webinar today on Q&A on Paycheck Protection Program forgiveness. Before we get started, just a few quick webinar reminders. If you have a question, please submit it in the Q&A box at the bottom of your screen, and the speakers and hosts will be notified. This webinar will be recorded and posted at brac.org/recovery. Now, with all the announcements out of the way, I'd like to introduce our hosts today. We have with us Elizabeth Walker, Research and Policy Project Manager with the Baton Rouge Area Chamber, to introduce our speakers.
Thanks, Katie, and thanks again for joining us for this webinar today. We have got with us Matt Glatt, Senior Vice President at B1 Bank, Bryon Garrety, CPA and Partner at Garrety Associates, and Ben Vance, Consulting Director at Postwait in Netterville. I'm going to go ahead and let Matt kick us off, so we'll have as much time as possible for questions at the end, and I will see you back there then. Thanks all. Matt?
Well, welcome everybody. Let me start off by saying that today is Veterans Day. I'd like to start this webinar by expressing my sincere gratitude to the many veterans who have served to safeguard the liberties that we all cherish and often take for granted. So veterans, we salute you and we thank you for your service. The PPP U.S. Treasury Program is the topic of today. I'd like to point out that this is a U.S. Treasury product and not a bank product. It's being administered through the SBA. After it came out, the rules changed 8, 9, 10 times. To notify the banks about those changes, they have a interim final rule. To be honest with you, as far as I'm concerned, and I've been a banker for 41 years, it's written like a parable. So what I'd like to point out to everyone, and something that's been very helpful to me and I think would be helpful to everyone, is that the SBA themselves produce a question and answer, and they post it on their website. So if you go to www.sba.gov and you type in PPP forgiveness, you'll find that one of the first things that pops up is the question and answers. If you haven't read it, I would encourage that you would do that immediately following this presentation today. I can tell you that our bank has began to send applications to the SBA for forgiveness. The good news is that without exception, 100% has been forgiven in every case. The only issues that we've had is that if a PPP application was taken and the EIDL loan, the EIDL loan, wasn't disclosed at the time of the PPP application, then there's a $10,000 or however much your EIDL loan was balance that we're working out with clients. Other than that, it's been a 100% success rate. We've done about 1/3 of our PPP clients in the first month. About 30% of those have been forgiven. They're taking somewhere between 7 to 21 days to give us an answer back. We are receiving the money, we are paying the loans off, and we are notifying our clients that their PPP loan has been terminated. So I can tell you that having been through this entire process, I'm particularly proud to see the system's working. I would encourage everyone to understand that it's more than likely that as the bank turns in these applications, they're going to be forgiven 100%. But the fact of the matter is just like an IRS tax return, they can be audited. If you haven't already started talking to your CPA, you need to do so soon. Even if you have a $50,000 loan and less, which there's a new program out for that, I think I would still work with my CPA and make sure that my numbers are correct. It's going to be important if your file is pulled and audited. I think the questions that we've had have been how to calculate FTE, what is my covered period, what about the eligibility of some expenses outside the covered period, what documents do I need to provide? As a banker administrating this program, I have to tell you that the majority of the time my answer is that it's important that you contact your CPA and you work with a CPA to determine all those things that you need. I say that a lot to clients, and quite frankly, I don't think there's a time in my banking career where the relationship between the client, the CPA, and the bank has been more important. We're fortunate enough today to have two really talented CPAs with us. I want to introduce Bryon Garrety. Bryon is, when I'm not working with an individual client CPA, he's my go-to contact for a lot of things. I trust him explicitly. He's got great experience. I think you'll find his presentation to be rewarding today. And Bryon, I'd like to turn it over to you.
Thank you, Matt. I'll ditto the things that you've said. I think we've probably had as much client contact or more this year on a variety of topics and helping people through, this overall pandemic than we have in any other year. Even though some businesses may have been down, I think the number of phone calls and actual conversations, be them in person or via Zoom, were up. Got a quick presentation, or I'm going to go through it fairly quickly, and so that we can get to questions, because that's really where the rubber hits the road. I will say this: certainly working with your CPA is important. If you've got an outside payroll company or you've got an internal payroll clerk, those are going to be very, very important people to bring into this process. And I will say that it is a process. The larger your company is, the more complex the payroll is, the longer it's going to take you to complete your forgiveness application. If you're a small company and you're $50,000 or less, hopefully it will not be too burdensome. It'll go very, very quickly for you. But we are now into the documentation game, and that's what we're going to kind of focus on. Okay. We're primarily going to be talking about the three forms under the 3508 series: the 3508 itself, the 3508S, which is a new form for loans that were $50,000 or less, and the 3508EZ, which is for very, very simplified people with payroll or for sole proprietorships. Okay. I need everybody to remember, Matt already mentioned it, this is an SBA program. Okay. It is a loan that will hopefully turn into a grant as long as we do everything correctly. Okay. It all originated underneath the CARES Act, and although it's probably changed, with the FAQs and things that are out there, they're above 50 right now, and it seems like every week there's a substantial change that comes out of the SBA. And I will promise I'll make to you is between now and the time it wraps up, there'll probably be additional changes. So it is something that we have to pay attention to. Okay. Stats for Louisiana as of closing for the PPP program: $78 billion to the state of Louisiana. $7.4 billion to the state of Louisiana. Almost 79,000 PPP loans. As of closing, there was still money left in the PPP program. They did not distribute all the money that was allocated. Okay. If you ask for slides later, I can have these provided to you. This is just a table that we'll use for when we do some of our testing. Okay. Matt's got a pretty good track record going on right now. He's saying, everything that they've submitted and seen so far has been forgiven. The ones that I have seen that haven't been forgiven or are struggling for forgiveness are the ones that were essentially ineligible when they applied. There was some defect in the way they applied. They calculated the amount of PPP incorrectly. They weren't truly eligible for it, and/or they included independent contractors inside their original PPP amount calculation. This slide is probably deals with the largest error that we've seen, and that was in the rush to get PPP. Many companies did include the amount that they paid to independent contractors in their payroll totals. If the bank wasn't checking thoroughly against their numbers, those amounts were granted, and those amounts are not going to be forgiven. The two sites that are on here give you specifically some of the things under the rules in the CARES Act where you can find those. Okay. The SBA has already stated that a loan made with material error or misrepresentation cannot be forgiven. And just simply put, if it was breaking the law as it existed when it was created, there may not be a fix for it. It's going to fail all the way through. Okay. Not to be negative, though. It is a documentation game. And before we start running around and saying, hey, what quarterly reports do I need? What payroll reports do I need? There's something that I need everybody to do. And that's, meet with your CPA, meet with your banker, because I think it's very determinative and very important that you recommend or that you begin to record what your state of mind was when you applied for the PPP loan. Okay. I think it's good to have a narrative here. Okay. Why did you apply for the PPP loan? What was going on? What were the conditions that you were facing at that time? Because for a lot of businesses, it changed very rapidly. Some businesses excelled during the pandemic. Other ones have yet to get their doors reopened. Where were you standing? Both your CPA and your bank can help with that. Your banker can look at it and knows your financials and can say, absolutely, you've got to apply for it. You know, we see your daily deposit average crashing, and we know what that's going to mean for you. Your CPA certainly is the one that can help you run your ratios and say, hey, you were in a financial hardship. That's why you applied for it. But I think understanding what your state of mind was when you applied is going to be very important if you ever are audited. Okay? In the end, when we get into this forgiveness, there's essentially three options that can occur: no forgiveness, partial forgiveness, or entirely forgiven. Matt's already mentioned that, you know, what he's seen isn't entirely forgiven as far as his bank experience goes. I've seen loans that are entirely forgiven. I've seen ones that just didn't meet their full numbers and have been partially forgiven. I have not had anybody come to me as of yet that has no forgiveness. Although I have had a phone call that on one that I don't think will be forgiven because it was just the application process was very filled with errors. Okay. In that, we have to realize how much the program has changed. The SBA and the government, I think when they originally conceived the program and put it into place back in April, probably said about 75% of the loans will be forgiven and the rest of them will have some repayment obligation. That's changed over time. When they moved from an 8-week period to a 24-week period, when they lowered the payroll threshold from 70% to 60%, all those things really greatly increased the amount of loan that would be forgiven. And I think if you went and remeasured Congress's state of mind now, their intention is probably for the vast majority of the loans to be forgiven, not just maybe 75%. Okay. When we get into the loans, there's several tests that need to be done. Okay. The essential tests are, first of all, the last calculation on the form 3508 was 60% or more of the money that you got from PPP used for payroll. Okay, that is, although it's the last test on the form, it really is the primary test. If you didn't use 60% or more of the money on PPP, you're kind of in that position where you're not going to see the full loan forgiven. The other tests really concern how many full-time employees or how many employees did you put back to work, okay, as opposed to before the pandemic. There are two testing periods for that, and we can get into some of the specifics, but I don't want to get too lost in the weeds. We want to leave plenty of time for questions. But all of this is based upon data. And where I see people struggling is in trying to gather the data and say, what do I need? They're just basically lost, especially when you start to read the longer version of the form 3508. And you say, okay, what is a table A and table 1 and table 2, and how do all these things work together? It's complex, but in the end, it's kind of simple. They're looking for a few things. Hey, do you have the same number of employees, or are you really, really close? And did you pay them the same amount, or did you cut their pay? If the answers to those questions are yes, I have the same number of employees, and I didn't cut their pay, everybody was earning about the same amount, you're pretty good to proceed. But if you were a company that was impacted and your workforce was reduced because of the pandemic, you weren't able to put everybody back to work, or maybe even one of those places whose doors just hasn't even opened yet, you've got some homework to do. You've got some work to do to work towards a large percentage forgiveness or 100% forgiveness. Partial forgiveness. The example that I have in my slides, and we can talk a little bit about, is a company that had 10 full-time employees prior to the pandemic. So in February, they had 10 full-time employees before we were hit with anything from the virus. Okay, they finally received their loan, say in May, and during their either 8-week election or 24-week election for their covered period, they were only able to put back to work 8 of those 10 employees. Okay, off the top, that means that loan is going to be partially forgiven. They were only able to put back 80% of the workforce. They could have some issues there. They may not be 100% forgiven. The calculations within the table help with that. And I've got a few shortcuts and the things I want to share with you. So again, we don't get lost in the weeds. We can get to answering some of the questions itself. We've come up with a kind of a simplified data gathering tool, and I want to share that with you. Not to overly simplify, but again, just to kind of take the fear out of the process and get people to actually gathering the data so we can move forward rather than worrying about the data. Again, I can share this with you, at a request, or I'll share it to the chamber and let them make it available. Basic information, probably the first thing that we need to do, are very, very simple things. This all comes off the original application and from talking to your banker. The legal name of your business, just the demographic information, address, zip code, business identification number, and probably some of the things that you may need to gather, the SBA loan application number, if the lender was using a separate lender number inside the bank, the PPP loan amount, and certainly the disbursement date. Disbursement date is important because that's the first date that we start to measure things. Okay, that's when the money went into your hands, and that's when your covered period begins. This application for forgiveness has a differently worded question than the application for the loan because it asks specifically for the number of employees that were working for you at the time of the application. So you have to go back to that date. Not we're working for you in 2019, but specifically when the application was made. And then, of course, whether or not there was anything sent to you over through the EIDL advanced program. Okay. Basic data there. Now we start to get into some of the inner workings of the forms and some of the data that you'll need there. And this is where your payroll company, knowledge of your payroll system and those things come in. The first thing that you need is essentially an employee master file, okay? Employee's last name, first initial, last 4 digits of their social security number, their earning code, whether they're salaried or they're hourly, the position title, their hire date, and if they were terminated, what their termination date was. We're basically gathering all this information for 2019 and for 2020, and this is the full database of information you needed. There will be things selected from it. And then the next item are what we call payroll check registers. This is a listing of the check, the date, the amount, the last name, the social security number, first initial, the earnings code, again, whether or not they're salaried or hourly, the hours paid, the hourly rate, and the gross earnings, okay? From this payroll check register, we gather these both for 2019 and for 2020. All the data that you need to complete the 3508 can be gathered, okay, as far as the payroll calculations gone. We've developed some software within the firm that allows us to do this very, very quickly. If you've got a payroll of 40 or 50 people and you try to do these calculations by hand, you'll probably be spending days, okay, as opposed to hours. So again, those items are really the finite data set of everything that you need to get started in order to do it. The other documentation that you need that you do have to present to the lender are going to be the quarterly reports for 2019 and for 2020, and the state quarterly reports for 2019 and for 2020. Usually from that, the lender can make the decision that it all was spent on payroll or the proper amounts were spent on payroll, and then the loan qualifies for submission to the SBA for forgiveness itself. I have taken probably what is normally 45 minutes worth of a presentation and really condensed it down so that everybody has a good chance to speak. The slides that I have go into more of the instructions and try to take some of the instructions and what's confusing and make it a little more palatable for people who don't work for the SBA. So please, if you request a copy of the slides, I'm happy to present, answer any questions, and also kind of pass the baton to Ben so that he can talk to us about some of his experiences and what he's seen so far.
Yeah, thanks, Brian. So this is Ben Vance with Postal 8 Netterville. Similar role as Byron, just helping clients go through the PPP calculations, or in some instances, they may have a payroll provider or they're doing it in-house and we're there to answer questions. We're there to help with some of the nuanced schedules, or we're there just to kind of be support with them as they're coordinating with their banks. Some of the things we see, I guess what I want to do and still leave time for questions is really talk about when we see these payroll reports or we see some of the online bank calculators, and I believe we talked about this earlier, where at the end of the day, it's pretty simple. Wages and reductions in payroll, reductions in compensation, but there are several nuanced pieces that lead into that. And each one of those pieces can have different dates and measurement periods and things to look at, and things that if you're not getting full forgiveness or you're on the fringes there, could matter. So we want to make sure we've picked the right dates, or we've picked the right methods, or we don't have any exposures, and then certainly we've documented our file accordingly. So I want to touch quickly and then leave some time for Q&A on a couple of things. Easy eligibility. So I do want to talk about the easy form, because we are seeing quite a good amount of those, especially with the 24-week cover period. I want to talk a little bit about cover period and alternative cover period. And I want to talk about some of the FTE calculations. There may be a few other nuanced items that my guess is we'll get to them in questions. If not, I'll kind of rattle them off, because I'm sure some of you are thinking of them. So easy eligibility criteria basically is saying if you didn't have any workforce reductions, or you didn't have any compensation reductions greater than 25%, you can sort of go to this express lane, and there's a much simpler form for you to fill out. But there are certain things to check whether or not you did have, did or did not have any FTE reduction. So it's not as simple as saying, did I reduce any headcount? It's based on hours, and there can be over the time where you may have had people leave, people that were terminated, kind of why they were terminated, and you rehired some of them. There's certain nuances that may not be as simple as if I had 5 employees before and I know I have 5 after, you feel pretty comfortable. You have hundreds of employees with different what I'd say classifications, whether they're hourly or salary, it may be more nuanced. So from the FTE reduction, and these are where the different dates come in, and this is a little bit into the weeds. For easy form, you're looking at your FTE count from January 1st through the end of your cover period. For the compensation reduction, you're looking at the first quarter average wages to the end of your cover period or your alternative cover period. And this is where I think earlier Matt was saying the way this thing is written, you just kind of talk yourself in circles on certain things. So for FTE, you're looking at cover period. For compensation, you might be able to pick cover period or alternative cover period, and those things may matter. So we'll get into a little bit of that. For cover period, as Byron was talking about, really driven on your loan disbursement date. So you receive your loan on April 15th. If your payroll period starts April 15th, that's nice and easy. But for some people that may have received their loan on kind of in the middle of a payroll period, you may have the option of picking, I'm going to start from my loan disbursement date, or I can look at the start of my next payroll period immediately after that loan disbursement date. But again, as we talked about, it's driven on that loan disbursement date. So for some people, for your wages, you may be able to include more wages if you've got a payroll period that was paid soon thereafter your loan disbursement date that included earnings that were earned prior to your loan disbursement date, but paid right after. So that's something to look at when selecting what wage period you're going to look at. But again, if you take the alternative cover period, you still have to look at the cover period for doing FTEs. And I don't know if that was, I can't think of logically why. I'm sure there is a reason, but it may just be there's so many different definitions. But nonetheless, that is how it's written. And there are a few other areas where even if you're using the alternative cover period, you still have to use the cover period for looking at non-payroll costs. And again, the FTE count for easy eligibility. You are allowed to use the alternative cover period if you're not doing the easy. So again, we don't make this stuff up. We're just following it, but it is kind of easy to get distracted when you're looking at that. So we're talking about FTE calculations. There are also 2 different methods you can look at. You can look at an actual method and a simple method. Simple method just says, if I work more than 40 hours, I'm a 1. If I work less than 40 hours, I'm a 0.5. So it definitely is an easier way to track. The actual method is going to look at more of a pro rata. So if I work 80 hours over a 100-hour period, then it's 80% or 0.8 of an FTE. They're going to cap you at 1. And that's actually on a 40-hour work week period. So if I work 35 hours over a 40-week period, my FTE would be 35 over 40. But if I work 50 hours over a 40-hour work week, I'm still capped at 1 on kind of an average basis. So it's an area where you may want to look at, if I'm close on an easy eligibility, can I get there, by simply changing the method? That might be a way to look at it. And we have seen some that we had a client that had a payroll report provided to them by a third-party payroll provider, and they $300,000 of their loan, I forget, it was like an $800,000 loan. $300,000 was not going to be forgiven based on the calculation, and they were simply using the simple method. They were not using the actual method. And I think where we saw with that one, and again, it could be input-driven error or mistake, or just in how some of the data is aggregated, they weren't necessarily tracking the hours worked for their salaried employees. So the calculator was just calling them a 0.5, and it certainly made a difference. And we were able to cut their forgiveness amount, actually their non-forgiveness amount in half. So that's something to look at. Again, not trying to get too much into the weeds, but there are various date periods to pick from the, when you're looking at the simple form 3508. So when you are working with your payroll provider or doing it internally, you want to look at, by my math, if you're seasonal, there's almost an infinite amount of payroll periods you can look at. But in general, there's 2. There's a February 19th to June 19th, and a January 1st to February 29th. And you're going to compare that to the end of your, the average over your cover period, and see which ones, again, with the actual and simple method. So in any case, I think you've got 4 methods you're looking at in all of them to see which one works out the best. If you're seasonal, there are 12 different other measurement periods you could potentially look at. But I'll say all of this if you run these calculations and kind of, as Byron suggested, if there's a kind of a simple form to get all the information together and you're going to be more than enough forgiven, it may not be worth going through all these different iterations, and it can certainly cause your head to spin, as some of ours have lately. But if you are on that fringe, or you're in that $2 million plus size, or you just want to maintain, I guess, all options and maintain your records and really understand it, then there are several different areas for you to look at. As we're working with clients, I think FTE count is probably the biggest one. We've got a lot of not gray areas, but I just think there's a lot. There's not a simple report you can grab. There are other calculations that need to be run off of that. So we're spending a lot of our time helping clients understand what that FTE calculation is. If you are using some of these models that I've seen out there, or even some of the bank portals, it's kind of a provide me your FTE number. And it doesn't really say provide the report and then we're going to calculate it. It's more of a give me the simple number. Is it 50? Is it 60? But there's some support that needs to go back into that. So we've been helping clients with that. I'm going to say mistakes on the first round that we've seen, or other nuances, or when you're dealing with owner employees, there are certain caps on compensation, whether you're doing the 8-week or the 24-week, and whether it's retirement, health insurance, or your SUTA payments, differences on what you can and can't include on owner compensation, whether you've got guaranteed payments that may not be showing up in your payroll provider's form that you want to add back. That's another area that we've seen a few exceptions to revising some of these calculations. And then how an owner should not also be counted in your FTE calculations. So we want to make sure, if you're looking at your FTE counts, that owners aren't in there. There are a number of other exceptions on FTEs that you need to have documentation for. Safe harbor. So for example, if you have had any FTE reductions, if there was a good faith offer that was documented and rejected, or employee was terminated for cause, or there was a voluntary reduction, then you do not want to, you're not counting them as a reduction to your FTE. But if I'm getting this correct, because again, there's a lot of stuff going on, if you then hired somebody else to fill that position, you're not allowed to essentially, you can't double count. Like if you're going to use the FTE exception, it has to be a position that terminated for cause, they voluntarily left, or you made them an offer and you rejected and you did not fill that position, then you're not allowed. That's not going to count against you. I have seen some calculators where they're kind of counting their total payroll and then they're adding back all the people that they've documented that they made an offer and they rejected it, or employees that were terminated for cause. And if you're including people that you then rehire that position and the exceptions, you're going to be overcounting your FTE. So be mindful of that. I think that's probably the biggest area. The biggest area that we've seen. Outside of that, I'll just kind of echo what's already been said, is talk with your bankers. Sorry, that's my Siri. Sorry, Siri's thinking I'm asking it questions. Talk to your CPAs, talk to your payroll providers. I think it's also, what I'll say, is important for the business owner that's filling it out to certainly understand. So I'm looking here at the screen of some of these certifications that the CPA is not making and the banker is not making, the company is making. So definitely want to make sure you understand what the information that's going in and certain the documentation requirements there. With that said, I could talk again on all the nuanced areas, but I'll pause and see if there's any other comments from Matt or Byron, or we can get to some of your questions.
Well, I'll back you up on the certifications and the essentially attestation clauses that you're signing, that everything is true and correct. They're very, very similar between the three forms, and then as you get to the more complicated forms, you have to sign off on additional ones. But just like there was on the original application, you have to sign off on, the fact that the funds were used correctly. And as you get into the more complex forms, that your FTE count is correct and that there wasn't a 25% or more wage reduction. It's okay if there is. And again, when I see a company that's 20 or 25 people and they've gone through what we've gone through over the last 10 months, there have been people that have come and gone, okay? There have been people who couldn't come back to work. There were people that just moved on. That makes the calculation that much more difficult. So again, once you get above about 10 people, you're not going to finish this. If you're going to do this yourself, you're not going to finish in an hour. You're going to take many, many hours or involve many, many people's staff time to get the calculations run and gather the data. The simplified sheets that I have are just to kind of get it all compiled in one place so that it can get analyzed. The third-party payroll providers out there are getting very familiar with the reports that need to be run. And if you can get those reports, especially in an Excel table or some type of a comma delimited table to your CPA, normally those data sets crunching those numbers can become much easier. But to everybody who's going to do this, I strongly suggest you get the copy of the form or print out all three copies and grab yourself a cup of coffee on Saturday morning and take the hour or so to read through it and know what you're getting yourself into.
Thanks, Bryon, and thanks to all three of you for giving us a real quick rundown of the high points. I want to revisit something Matt said, which is that so far 100% of your loan forgiveness applications that you've processed have been forgiven. So that should hopefully offer a light at the end of the tunnel for folks, but also being aware that it's going to take some time, and that ever important relationship with your banker and your CPA is key to working through this process.
And Elizabeth, with that too, I'll say, we've worked with a number of different banks, and there are some, so hearing Matt say that, I think there are other banks that really aren't, maybe their portal's open, but they haven't really done any or very few. So I think it's going to vary depending on your bank. So if your neighbor says, oh yeah, I got mine forgiven, it doesn't mean you're doing anything wrong or your CPA or payroll provider is slow. It really is going to be driven kind of by your bank. So it's important to understand from them kind of what their timeline and their process is. As you may be getting questions, whether you're speaking to the CFO, controller, or the owner, keeping everybody kind of abreast of the bank's timeline, which then you've got the SBA's process driven on that. And we just are going to see variations. I don't think there's a hard set. I guess observation, I think I've seen larger banks maybe take longer to open up because they're trying to address a lot of these other issues, and smaller banks may be more nimble. But again, we've seen the gamut of accepting none to already gotten forgiven to online portals or still doing Excel-based calculators from a bank's perspective. So it's all over the map.
That's good to know, and kind of sets the expectation that it really can vary depending on who you're using and how you're going about it. And that kind of brings me to one of the main questions we got before the webinar started, which is what is the deadline for the forgiveness documentation to be turned in?
So I think all three of us can probably address that question, and we get it a lot, and there's been a lot of changes. I guess the best one was in August when they determined that from the end of your covered period, you've heard both these gentlemen talk about a covered period, but whether you pick the 8-week or the 24-week covered period, after the end of that covered period, you have 10 months to file. And if you look at it from that perspective, the banks have 2 months in order to issue an opinion, and then the SBA has 90 days in order to get a reply. Fortunately, my experience has been better than that, and I think part of the reason for that is this is an extraordinary time, and Americans are extraordinary people. People like the small business owners on this listening to us today. You guys are great, and we're figuring it out together, but it's taking everyone.
That's a great point. Everybody's kind of got to be understanding with the process. And it sounds like everybody then has a different start time on their clock. It just depends on what your personal loan situation was.
Right, and let me address that a little bit. If you're one of the more complex payrolls, you know, we've got 10, 20, 30, 100 people working for us. We know that we've had people that didn't return to work. We've had new hires. We've had all the things that can possibly complicate this. You need to begin your calculations now, okay? You need to begin the attempt to complete the form now, because within the form, there are many allowances. We've heard the word safe harbors that say, hey, you know, I didn't pass test 1, but I do qualify for this 3rd test. And if I pass that one, I still qualify for forgiveness. Those things really need to be determined between now and the end of the year, because your testing period for that to restore the number of FTEs or to restore any salary deficit that you may have is going to be December 31st. Even if your forgiveness period extends into January or February, your last day to take action can still be during this calendar year. So I've had somebody I've consulted with, and they were 2 people shy on their FTE count. Just one of those businesses, they worked a lot for schools, okay? And they just didn't need as many personnel because so many of the schools were virtual. But management there has made the decision that the 2 people that they're shy on, they're going to rehire essentially December 1st, so that they're trained to go back into the schools come January, okay? And that's going to restore their FTE count, and now they're going to qualify for 100% forgiveness. So if you work with your CPA and you get the data in and you're able to analyze it correctly, you can still get there even if on first pass you didn't get there.
That's a great
an obvious count there too is for somebody that's looking to say, well, I'll just start rehiring on January 1st. Well, by one day, you may miss, you know, $10,000 in forgiveness. So if you're going to do it, consulting with someone or looking at it earlier to have some visibility into what it may look like can help advise you on that scenario.
In my case, it was $37,000 worth of forgiveness that was potentially in question. So hiring them on a little earlier and getting them trained was certainly the right move for the company, and it also was the right move for their PPP forgiveness.
So the bottom line is start now. Start looking at
Definitely
it.
Start now. Yeah, come Saturday, you should be at least reading through the application and making notes to talk with your CPA and your banker about.
Absolutely. One of the questions we got was about, wondering whether they should wait until, I guess, the new administration is installed and, a little bit past the new year. And it sounds like you're saying it doesn't matter. Start looking into it now.
I would say procrastination is going to provide very poor results. So yeah, if you begin now and you check all the boxes and you pass, then you can call your bank and say, hey, I'm forgiven. I just want to go ahead and turn it in now. But if you're one of those people that has a complexity or an issue that needs to be worked through, I would certainly want to know it now and be able to have some time to affect it rather than just say I have to accept it as it falls.
Right.
Yeah, I mean, I think we've got, we have a few that are in that $80,000 to $120,000 loan that have some nuances to them. And it's quite possible that between now and the end of the year, there's further guidelines on our guidance issued that maybe up to 150 is fully forgiven. So I think it's a scenario where we're encouraging people to start the process and look at it, maybe not hit submit until things are a little more clear, unless you feel comfortable about your forgiveness. So, echoing the comments that have been raised.
I think at the end of the day, regardless of your loan amount, if you're audited, you're gonna be very comfortable if your CPA has reviewed and directed you.
Smart. Ben, you touched on something that we've received a question about back in July. There was an article about legislation that had been introduced to grant automatic forgiveness of PPP loans under 150,000. Do y'all know the current status of that? Is that still accurate?
So the $50,000 and under program is basically that. And, Ben referred to something that we've all been hearing. The head of the SBA has been talking about it in seminars that are not open to the public, and he believes that it's going to happen. And I think Ben's advice is great. Every time there's been a change or an update, it's been to the advantage of the client. So, waiting can be helpful for a lot of reasons.
Okay. Let's see. One of our participants has asked about grant funding. They used some grant funding during the covered period. How do y'all suggest handling the FTEs and gross wages for the forgiveness application in light of that grant?
Don't know that it's going to actually affect it. If we tier these, if they're talking about Main Street program and some of those things, the SBA is going to come first. So you're going to do your calculations for the SBA and make your application there first. The SBA is going to look at it, and it really calculates based upon gross payroll and then the allowable related payroll expenses. And I've got to say, in the vast majority of the cases that I've seen, especially under the 24-week calculation, we're not having to go into calculations of rent and utilities or any of the other allowable expenses. The payroll amounts are consuming everything.
Okay.
Yeah, that's a good point. You don't have to submit anything there. So I think you only submit on the non-payroll piece. You're only submitting the ones that you need.
Right.
You're not required to submit everything.
So if you were to get into the Main Street program, those other expenses that are out there outside of payroll, be it rent, utilities, cost of PPE and sanitizing facilities and all those things, are where that $15,000 worth of grant money would go.
Great. I see some activity in the chat. I think it's worth saying out loud. Someone asked which banks have started the forgiveness process. And Matt, you said that all participating banks have started and that it varies, depending on how long that review takes to be completed. So
Right. I think the point that Ben made earlier, that there's some banks sort of delayed. They're trying to figure out exactly what they're doing, how they're doing it. And you're talking about hundreds of thousands of applications, a lot of decisions to make. Which vendor are you going to use for an online service to handle those applications? Exactly how they're going to handle them internally and do the funding is all things that they're trying to figure out. I would say this. I don't mean it to be taken any other way than if your bank or your CPA doesn't understand what's going on, then you probably need to get another bank or another CPA.
good to know. Let's see. We've got someone who's asked about independent contractors. If y'all could provide a little more clarity about this. If you included independent contractors in your application, does it jeopardize the forgiveness for the entire loan or just for the portion of the loan applicable to the independent contractor?
So we've, Byron, I'll let you, I guess, piggyback on this. We have seen some that have kind of came to us and said, I got my loan, it's X, but somehow, the majority of their employee wages that they, not even employee, the wages they included were 1099 labor. So the definition is they're not eligible for forgiveness on that. So I kind of scratch my head of how did they get through the bank process? But yeah, I would not anticipate labor paid for 1099 workers to be forgiven. Don't know if they're under 50,000 or if they're in that 80,000, do they get under the forgiveness piece, the auto forgiveness? But I still think they would be ineligible from the start, and they shouldn't have gotten a loan to begin with. So I'm curious. My guess is if that happened, it's going to be more prevalent, like bank concentrated. And so there may be some flags where, again, from an audited standpoint, you may be under 50 and you may have some 1099s included, but if that bank may have gotten, look, whatever reason they're looking at them from that very reason, you may be exposed there. But that's just speculation.
All right, I'll add to it, and not to cause multiple sleepless nights. I just need people to be aware of the information that's out there and what the SBA will be looking at, okay? So the SBA, certainly being part of the Treasury Department, has access to records that the IRS has. So if you got a PPP loan based upon payroll that you had in 2019, but you don't have any payroll in 2020, they're going to know, okay? They're also going to know, at least within reason, the amount of payroll that you had. So if you got $100,000 worth of PPP, but through 3 quarters in 2020, you only had $25,000 worth of total payroll, the SBA is going to know, okay? So that can count whether you use the EZ form, you use the S form because you were $50,000 or less, or you were a 3805, you did the full calculation. To any client that I know that's facing that problem, we've addressed it on the front end. We've gone back to the bank, okay, and said there was an error in calculation. Can we restate the loan? Many of the clients have paid back. One or two of them couldn't, and they know they're just going to be in a continued repayment obligation on that. But I'm not going to let any of my clients knowingly submit a false form.
Great. All right, we've got a question about the form that's up on the screen, the 3508S. It's got an expiration date of 11/30/2020. Again, if Congress still hasn't determined forgiveness granted to loans under 150,000, do you move ahead and apply for forgiveness or wait?
I think on that one, if you got a loan less than 50,000 and you can complete the form and you know that you've done it properly and that it's going to be forgiven, just get it out of the way now, okay? If you're between, $50,001 and $150,000 and you want to wait, I think you can wait to submit, but I wouldn't wait to start gathering the data.
Great. All right, Gail has asked, what happens if a business closes before applying for forgiveness? They spent the money on payroll in the 8 weeks following receiving the PPP, but due to the slowdown in business, they were forced to close. Can this loan be forgiven?
If the money was properly spent while they were open, it can be, okay? You're gonna have to go through the calculations to make sure, or to provide the documentation that the loan can be forgiven. And let's start off with this. If you don't fill out the application and apply for forgiveness, it's not forgiven. If you don't ask, it doesn't happen. So even if the business is closed, somebody's got to still fill out the application and ask for forgiveness.
You don't get what you don't ask for. Let's see. I think you touched on this during your presentation, but let's revisit it. If a person resigned during the PPP coverage period and it took time to hire a replacement, can we get credit for that in between time towards our FTE calculation?
So I don't know exactly where it is in one of the dozens of FAQs, but I do recall seeing that if you rehire that position, that the FTE exception doesn't apply.
It's one of the safe harbors, right?
Well, it's a safe harbor, but you can't use it twice. It's either, hey, I can't fill the position, so that position number 4 in my company can't be refilled, so I get to eliminate it and it doesn't count against me. But I can't eliminate it and hire somebody for it and have it count towards my FTE count.
Right.
So I don't get to double dip.
I received a question about the payback terms. I'm assuming if this is for a PPP loan that's not forgiven. They asked, do the payback terms automatically change from 2 years to 5 years?
Depends on the origination date of the loan.
It does not. It does not change.
It does not change.
Amount of money is not forgiven. My recommendation is you go meet with your banker. Sit down, you talk about the circumstances, your situation, you determine what's going to be the best course going forward. The answer will be different for different clients. I think the solutions are going to be handled on a case-by-case basis, and I wish I could give a better answer than that.
Fair enough. We've got another question. Would I put the number of employees at time of forgiveness application as 0 for the business that closed?
It depends on how many employees were working basically when you applied. That's the number that you go with. If there were 4, you put 4. If there were 0, you put 0.
All right. If we had employees that we had to let go due to a contract non-renewal of business, how do we account for them as the exceptions on table A, FTE exceptions? So how do you account for that reduction due to non-renewal of business?
Well, go ahead, Byron.
Yeah, I really think it's probably a reduction due to the COVID virus. I would look for any of the more meatier exceptions in there that due to, rulings by DHH, that contract was lost or that other company couldn't renew with you. So I would dive in another step deeper, and I'll kick it to Ben. Sorry to interrupt.
Yeah, no, that's what I was going to say. So there is a safe harbor that if the reduction was caused by CDC guidelines or inability, so it kind of depends on the nature of that contract, but otherwise I would kind of prepare as though it would count against you and kind of see what that equates to. So, even if it's counting against you with your 24-week period and potentially some of the non-payroll costs, how much is it hurting you? And that's one of those areas where it may not be something that needs to keep you up. It may just be an observation that a lot of businesses are going through. There have been workforce reductions, and you just need to see. So kind of the point of get started early to see how it impacts you. You may still be fully forgiven.
Hence the reason to start calculating now and see where you stand. Again, if you were 100 employees and you dropped to 5, there's probably not a whole lot of things that can be done between now and the end of the year. But if you were 10 employees and you only dropped to 8 or 9, it may be very worth your while to look at rehiring between now and the end of the year.
Yeah, and they followed up and clarified that it wasn't, the contract non-renewal was not caused by COVID. It was just a contract that was awarded to another vendor.
So I think that's a reduction.
Mm-hmm.
Yeah, I mean, that'd just be one of those workforce reduction factors.
Okay. All right, we've got a real estate question, which I think that applies to a lot of folks. This participant says, I own a real estate firm and was approved with agents 1099s and am ready to ask for forgiveness. Should I include the 1099s for the amount I gave to them and hope for the best? What is the most I can give any agent?
I think that's the question we answered before. It's probably redo the loan or.
You're going to be in an area of non-compliance, and you need to carefully review those questions on the form, because you'd be submitting that everything was done correctly, and you'd be signing off on that. Okay, and it sounds to me, with just the limited facts, that this isn't a business that should have gotten a PPP loan because they're all independent contractors. And I would be meeting with my bank later today or tomorrow to talk with them about the circumstances and see what corrective actions could be taken.
Great. I believe those are all the questions we had at this point. I'll give folks a couple more minutes to submit any final burning questions.
Well, I can. Matt talked about the FAQs that are out there. I pulled up the Treasury website, okay, this is the front page, hometreasury.gov. This red banner right here, can everybody see it?
Mm-hmm.
Okay, is where you go for COVID relief. And if you just scroll down the page, you'll come to a wonderful set of frequently asked questions. These questions have been being answered since April. Our last question was on 10/7 of 2020. And there's even questions now that have started about loan forgiveness. These are extremely telling. Some of the questions are asked from the bank's point of view. A lot of them are asked from the borrower's point of view. but it not only does it give you a history, a lot of the questions you may have are already here, okay? Because they've been posed to the Treasury Department and you have written guidance. If you're going to follow something, following the written guidance is the best way to protect yourself.
Absolutely. And on that note, I would like to remind everyone this recording will be available on BRAC's Vimeo page, which you can access via brac.org. And to any of the participants who registered for this webinar, we will send out Bryan's slides and any other documents that might be helpful. And as always, you can reach out to me at elizabeth@brac.org and I can direct you to an expert who can help you. So with that, I think that kind of concludes this webinar. I want to thank Matt, Ben, and Bryon again. Invaluable information. I know y'all have been helping the chamber and our investors all throughout this entire time, so we really appreciate your expertise. And just that good reminder, start early, get your data together, talk to your CPA and your banker, and get started.
Absolutely, absolutely.
Great. Thank y'all so much. Appreciate it.
Thank you.
Bye-bye.